Please read. Banks in India.
Banks in India, like elsewhere, face a variety of risks which can broadly be categorized into the following types. First one is a credit risk. This is the risk of default by borrowers or counterparties on their financial obligations. Banks in India face credit risk from loans, advances, investments, and other credit exposures. And the second one is market risk. This includes risk arising from changes in market prices, such as interest rates, exchange rates, and equity prices. Fluctuations in these can affect the value of a bank assets, liabilities, and off balance sheet flow items. And the third one is liquidity risk. This is the risk that a bank may not be able to meet its financial obligations as they come due without incurring unacceptable losses. Banks need to maintain adequate liquidity to fund their operations and meet withdrawal demands from depositors. And the fourth one is operational risk. This encompasses the risk of loss resulting from inadequate or failed interest process
Internal
system
process.
people uh,
Internal processes.
internal processes, systems, people, or external events. Operational risk include fraud, cyber threats, legal risk, and human errors. And the fifth one is legal and compliance risk. Banks must comply with a wide range of laws, regulations, and standards. Failure to comply can result in legal penalties, financial loss, or damage to reputation. Reputational risk. This refers to the risk of negative public perception which can arise from any of the above risks or from poor business practices, ethical lapses, or adverse events. And the seventh one is systematic risk. This is the
Systemic.
risk that,
Hello. Systemic risk.
yeah, systemic
Systemic.
risk.
Uh,
Systemic risk. This is the risk that disruptions to the financial system could impact multiple institutions or even the entire economy. Even like economic downturns, systemic frauds, or market crashes can pose systemic risk.
mm,
And that one is interest rate risk. Bank in India, like elsewhere, face risk related to changes in the interest rates, which can affect their net interest income and the value of their assets and liabilities.
mm,
And ninth one is cyber risk. With
mm.
the increasing digitalization, Indian banks are also exposed to cyber threats, including hacking, data breaches, and ransomware attacks.
Mm,
And the tenth one is geopolitical and country risk.
mm.
Banks are operating internationally or dealing with international transactions are exposed to geopolitical tensions, change in government policies, and economic instability in other countries.
Mm.
Managing this risk efficiently is
Effectively.
crucial for
Managing this risk effectively.
managing this risk effectively is crucial for banks to maintain financial stability,
Mm.
protect depositors' frauds, and sustain
हाँ
long-term
हेलो
profitable
डिपॉजिटर्स क्या है?
funds. Sorry,
ये तो बदल
funds
दिया,
and
ये एक वर्ड बदल दिया भी बिल्कुल खराब हो जाता है वो मीनिंग. अच्छा,
uh,
शुरू से पढ़ो. मैनेजिंग दिस रिस्क.
managing this risk effectively is crucial for banks to maintain financial stability, protect depositor funds, and sustain long-term profitability. Regulatory authorities in India, such as the Reserve Bank of India, impose guidelines and frameworks to help banks mitigate these risks and ensure the stability of the banking system.
Good. Thank you. Thanks for reading. You read
Thank you.
nicely, except one or two mistakes. No problem. Thank you.